right, the Bernanke-sponsored inflation genie looks like it's out of the bottle. Make no mistake, there's a huge uptick in prices going on around the world, with dollar commodity prices skyrocketing to record levels. So rather than complain about these rising prices, we're going to discuss some ways that you, the Kudlow viewer, can parlay these price hikes into tidy little profits for your portfolio. Tidy little profits. Here now to discuss how to position your portfolio in the event of inflation is Lee Munson, Chief Investment Officer at Portfolio Asset Management, who doesn't believe in inflation, and Jim Urio of TJM Institutional Services and an options action contributor who I'm thinking of as Mr. Inflation. So Jim Urio, start me off. If you think inflation is coming, and I know you're long gold, where does an investor go?
Well, you got to have a broad exposure to different things. I like the DBA, which is an ETF that has live cattle, cocoa, sugar. I like silver as well, because silver is interesting in that it's part of precious metal, but it's an industrial metal as well. I think if you're worried that the inflation is going to cause by a completely crumbling dollar, you want to be in the Australian dollar and the Canadian dollar, because those are two countries that kind of sidestepped a lot of the problems, and those currencies are becoming more important in the whole sovereign wealth store theme. So those are the trades that I like the most. I have most of those trades on right now as part of my weak dollar portfolio.
All right, good stuff. Lee Munson, go back to you. Tell me real quick why you don't think inflation's coming, despite the fact that we are seeing monumental, gigantic, humongous increases in commodity prices and commodity indexes everywhere in the U.S. and around the world. Go ahead, Lee. Real quick, tell me why you don't fear inflation.
Real quick, bifurcation. The emerging economies, they have inflation. The developed economies like the Eurozone and the United States, it's very tepid. It's 1 or 2%. And so I think that nobody, I want to pull a Don Draper and say, let's change the conversation and say, where are we actually seeing the inflation? We talk about it because commodities are priced in the U.S. dollar. That is true. I love Jim's idea about DBA, about agriculture and food. But when it comes right down to it, we don't have that same type of top-line inflation that those BRIC countries have. So I think the American investor needs to be a little bit more cautionary about saying that we have inflation just because some BRIC countries are buying up things that are priced in the U.S. dollar.
Lee,
No, go ahead, Jim, please.
All those things that talk about how we don't have any inflation, the CPI is so dominated by that homeowner rental equivalent, or I think that's what it's called, whatever. So it drags down and makes the inflation seem tepid right now. But we're talking about copper that's up 250%, wheat that's up 70%, the DBA itself, those other commodities are up 50%. In Econ 101, they told us if it wasn't a wage-driven price spiral, that it was somehow insignificant, and that when it's commodity inflation, that the substitution effect will kind of equalize things. But they didn't account for...
John, you're talking about economics 101. You just said it.
Sure.
That's the tell. The reason why copper is going up is because hedge fund hogs like me are driving up the price, and it's easy to do. The reason why wheat's going through the roof is because we had a bunch of fires in Russia. The reason why cocoa skyrocketed... Tell me the difference.
Here's the difference and why it's significant now and it wasn't before, because we always believed that if wheat went up too high, people would just back off and buy corn. But that's not, now it's a different thing, is that the mistrust of fiat currencies has forced people into things. And then the next level is speculation that isn't just hedge fund guys like you and traders like me. It now is it's so easier facilitated by ETFs, the broadening of the futures market and options, that we can now get these price bubbles that may take a couple of years to fulfill, but drive the price up in the meantime and have mom and papa, participating.
All right, Lee Munson, I want to switch for a moment to the subjunctive test. If, in fact, there were inflation, if there were to be inflation, how would you protect yourself as a portfolio manager?
Number one, I want to be out of my fixed income bonds. Number two, I do not want to own any TIPS, any inflation-protected securities, because they're tied to CPI. And real inflation, Larry and Jim will agree, is going to be food and fuel. What I want to be long are U.S. domestic companies, because, again, I would rather not be in the high inflationary areas of the BRIC countries, but I admit you got to get rid of your utilities. Those are like bonds. Those get hammered in inflationary environments. And financials, if it's not a Goldman Sachs that can make money on anything that moves, I think, unfortunately, you're going to have to trim down your financials. You've got to be in the commodity stocks. You've got to be in energy companies. And you have to be in companies that make companies more productive. My whole premise about not inflation, which answers your question of if inflation, is that multinationals, they need to fess up and say, we can't increase productivity any longer. We're going to have to hire people.
All right, let me just ask you this real quickly when I come back, Jim Uriel, about my skepticism on gold. But, Lee, what about buying real estate? What about buying homes? Residential real estate in the last great inflation of the 70s was a tremendous hedge against inflation. Now, I know it's been decimated, but the mere fact of its decimation, I ask you, would it be an inflation hedge again?
No, I don't think so, but I think you're on the right track, Larry. I would be more interested in looking at commercial REITs that have been priced for death. We have, when you add in foreclosures and all the things that they don't report, we have up to a 16-month backlog. Historically, we've had a 4-month backlog. 8 months is where we are now. 16 months, not ready for the trade yet.
All right,
but I think commercial real estate, yeah.
You're terrific. They're rolling us out. I was going to say to Jim Uriel that the gold price is already discounted 5% inflation. So why buy gold? But I'll let you rebut that the next time, and I know you will. Lee Munson, thank you. Jim Uriel, thank you.